Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 2nd, 2023. This is the first live stream of 2023. And 2023 is particularly exciting because it is likely to be very bullish for Bitcoin and crypto. All right, 2022 was rough for Bitcoin and crypto. Lots of sideways price action, a little bit of downside. But the prices are likely to go up substantially in 2023, okay? According to our analysis. All right, no prediction, 100% prediction of the future, but according to our analyses, very likely that will happen. And it's likely that we're seeing the beginning of that right now on the small time frames. Okay, if that interests you, then watch until the very end. Guys, another exciting thing is the US dollar currency index, the DXY, has yet to open because it's on break, okay? There are very few instances, very few times that the DXY, the US dollar currency index, doesn't trade Monday through Friday. Okay, typically it trades Monday through Friday, opens again on Sunday evening, but because today is the 2nd and the 1st, which should have been a holiday, right? The 1st of the year ended up being a Sunday or weekend, then I believe just like Boxing Day, the 26th, the day after Christmas, same deal. If it falls on a weekend, then the 2nd is taken off, okay? The DXY is an index, meaning it's an agglomeration or a collection of various other established exchanges, metrics, okay? It's a collection of those. So it itself has trading hours, but it doesn't have any holidays, okay? Its only holidays are actually when the exchanges that comprise the DXY take off. Then the DXY takes off by definition. So the London Stock Exchange, if that's down, or the New York Stock Exchange, or the European Stock Exchange. Do you understand? So you want to look and see if those are on break, if those are on holiday, then the DXY will also not trade. And that's exactly what we have here. DXY essentially on the verge of collapse, okay? The dollar is on the verge of collapse, and not in a bad way, okay? I'm not trying to fearmonger or anything like that. It went up a ton for 12 years. Now it's just correcting a bit, okay? That's all that is. And you can see that here on this chart. It's been going down pretty much steadily since late September. And if you go on the smaller time frames, you can see that we are preparing for another impulsive leg down, okay? And that has been in the works for some time, but we're at the neckline here, and we're about to break that. But we've been frozen here because none of those exchanges that comprise the DXY are trading. So that's why you see no activity in the DXY, and that's more than likely why you have yet to see an explosive move in Bitcoin and most cryptocurrencies, okay? So when will the DXY open up again? I think tonight. So today is Monday. Typically the DXY opens at 8 p.m. on Mondays, right? Because it closes, from 5:30 p.m. to 8 p.m. Eastern Standard Time. 8 p.m. is when it opens up again for the next trading day. So it opens for Tuesday trading on the night before. So I expect it to open in about a couple hours. And I would not be surprised if that coincided with a big move in Bitcoin and most cryptocurrencies. Okay? The other thing we want to do is look at the actual Bitcoin chart. Okay? So what happened? Let's zoom out for a second. And guys, I wish you a happy new year. Hope everything's going well. 2023 is going to be much, much better for crypto speculators, for people that are interested in cryptocurrency price accumulation, or sorry, not accumulation, but appreciation. Yeah, again, it's been tough. It's been tough if you've been in that game. But nothing goes in one direction. And, there's two sides to every coin, right? For us to appreciate in the ways that we appreciate in crypto, meaning go up in such a violent way and by so much, we have to have those periods where we go down or sideways for so long, okay? And people say it's bunk or it's a scam and it's over. So many people, if you just listen to mainstream news or just like open your phone, everybody, all the mainstream people are saying, oh, crypto is going to remain stagnant or down for 2023. Maybe there's a move in 2024, 2025. So many people say that, and that's fine. But you don't get that big movement without people first thinking that. Because if everybody thought it was going to go up, or it always went up, it just wouldn't go up much. That's just how the market works. Some people have to get shaken out or lose for others to win. That's a zero-sum game, All right. So if you're looking at this, what am I doing right here? I'm on the daily chart for Bitcoin, and I'm pointing something out. All right, there's two things I'm going to point out on this chart. First, the strong bullish divergence, okay? And it's already confirmed. So it's not a question of if, it's a question of when it plays out, okay? It started to play out here, but we're probably likely going to get more of a move out of that bullish divergence, okay? What's bullish divergence? Really quickly, when you look at your stochastic RSI momentum indicator, you make a higher high, and here you're making a slightly higher high, but not as strong as a higher high here. So that's bullishly divergent, okay? That is a good sign. That means that momentum is hidden a bit for a move up, and you're seeing that move up. You saw that move up from this point here, okay? The other thing I want to point out, this blue box, okay? Or this blue rectangle, whatever. I've had this in place for quite some time. I've noted that this is support. It's support, okay? And Bitcoin, once it broke this resistance, it went up, came back down, did a consolidation reversal on this level, and is looking now to break out from this level. So on the high time frame, we've been bullish for the longest because of that read, okay? And thus far, it's been playing out, okay? Obviously, we haven't had any spectacular moves from that area, but eventually we are expecting a move back up as a result of that, okay? That's the higher time frame read or analysis. Smaller time frame, just look at it. So I think it would be helpful to go on the hourly time frame. Here we go. Okay, the hourly time frame. This is intriguing. Okay, here once again you have your inverse head and shoulders. Very bullish move. Okay, and you could probably draw that differently, like this. Yep. Okay, so that's your inverse head and shoulders. That's your left shoulder, your head, and your right shoulder. If you study technical analysis, you understand that these are bullish constructions, and they usually work in such a way that once you break the neckline, right, you confirm the move. So this neckline, the neckline of this inverse head and shoulders, which is a bullish construction, has been confirmed with the breakout right here, okay, and the retest, okay? So you have a slight retest right here, boom, boom, bam, okay? So you did have a retest of that neckline right here. So you broke out, retested, and you break out, okay? Are we going to retest it once more? It's possible, but it's not necessary because you do have a retest right there, okay? So that's the small time frame analysis, all right? That's one aspect of the small time frame analysis. Second aspect of the small time frame analysis that I want to draw your attention to is the following. Watch this. Here. you can see an Elliott wave impulse here, and that is a very good sign if you're bullish, because this is what you are. Sorry, that's not what I wanted to draw. The impulse is actually starts. Whoops, what'd I do? The impulse. I'm sorry, guys. I'm out of control here. Okay, back to Bitcoin. The impulse starts here, right here. Okay. As far as I'm reading it, okay? Something like this. Okay, and a lot of things fit with this, and I'm going to show you, okay? Watch this. Ah, I did it again. That's not where it starts. Oh, man. What am I going to do with myself? Oh, here. Okay? Okay, third time's a charm. Right here. Guys, don't forget to like, share, and subscribe. Okay? This is what I'm seeing. This is a potential read on this move, okay? This move that we've gotten, not just in Bitcoin, but throughout the cryptocurrency market, it's since, literally, since the turn of the year, since the 1st of January, it's just been an impulsive move up, okay? And I believe that impulsive move up will continue. Okay, let me show you a few things as to why this is likely a likely move, a likely impulse, okay? One, we just showed you an inverse head and shoulders, okay? As we all know, in terms of pattern analysis, that is a bullish construction, okay? And so this impulse is essentially the result or the fruit of this breakout, okay? Because that's what you expect. You expect an impulsive move once this bullish inverse head and shoulders breaks out, okay? So that's the first thing. Second thing is, in terms of Elliott wave theory, this fits. Why? Because if you measure this purported wave 1, okay, and the wave 2 that comes and takes just about as long as wave 1 took to form, okay, you get wave 3 that ends right where wave 3 should theoretically end, between the 1618 and the 2 Fibonacci extension. Then you get a wave 4 that's relatively complex and a wave 2 that's relatively simple. And now you're just looking for a wave 5. So all of this is likely, if you have to say, oh, this is likely Elliott wave impulse, how do you know? There's a few things, and I talk about this all the time on the channel. The first thing is you want to look at the time it took for wave 1 and wave 2. Wave 1 and 2 are proportional in time and in price, or should be proportional in time and in price. You see wave 2 come between 0.5 and 618, doing a zigzag. That's exactly what you expect for wave 2. Wave 2 is sharp, typically, and it comes to between the 0.5 and the 618 of wave 1. That's exactly what we got. Also, so that's a price correlation between wave 1 and wave 2. The time correlation, wave 1 and 2 should be correlated in time. So they should take not always the same amount of time, but a proportional amount of time. So we see wave 1 took about 11 hours, and here wave 2 is taking about, I think, 618 of that. Like, yeah, about 5.5 hours, okay? Again, this is why it's important not to say, as some people may say, right? Some people who may not necessarily be as careful, they say wave 1 and 2 are equal in price, or time, rather. They have to be equal, right? The Elliott waves 1 and 2 have to be equal. No. Proportional. Because that proportion doesn't have to be 1-to-1, although it's usually 1-to-1 with waves 1 and 2. It could be 1-to-1, 1 to 618, which I believe you're seeing here. So wave 1 took about 11 hours. Wave 2 took about 5.5 hours. Okay? That's approximately 1 to 618. Then you get wave 3 projected to 1618 Fibonacci extension of wave 1. That's exactly what you got. And then you get a wave 4 that's complex. That is between the 236 and the 382 of wave 3. So let's measure that. And that's what you get. You see that? Guys, all of these tools, these reads, these indications, they make your case stronger. It's not about knowing 100%. Is this an impulse? Whatever. You don't know 100%. It's not about 100%. It's about building a case for all of your theses, right? My thesis is that this is an impulse, all right? 1, because of the inverse head and shoulders and bullish breakout. 2, because of the Elliott wave measurement, right? My wave 4 ending between 236 and 382 of wave 3. All that stuff put together lends credence to my thesis that, okay, we are in impulsive price action, okay? And if we're in impulsive price action, we're likely to get an impulsive move. Now, this wave 5 can be a regular wave 5, or it could be an extended wave 5, okay? Typically, you get the target of an inverse head and shoulders to be the height of that inverse head and shoulders projected from the site of breakout, right, which would be here, to the top side. So let's say that were true, then we get to about 17K, okay? So we get to about this level, which is possible, okay? But again, it's not absolutely the case that we have to stop there, because wave 5 can be extended. You know, wave 5 can be extended. So I wouldn't necessarily try to... I wouldn't try to be cute and just take profit. If this is an impulse, and this impulse is potentially the beginning of the bull run for Bitcoin in 2023, the last thing I would do is take profit on a short-term basis. You just get in your positions and let them ride, okay? And so if that, let's say that did happen, okay? Let's play that scenario out. Let's say we ended up going to around 16.9, okay? Not even 17K, 16.9. We'd come back to about 16,658, maximum 16,624, right? Because the 618 is the maximum retracement for typical wave 2. Okay, do you see how that analysis is done? So if I'm in a Bitcoin long, which I am, really high leverage Bitcoin long, extremely high leverage, as high leverage as you could possibly get. I like those. Take a little bit, you know, and maximize your leverage. I'm staying in that position and I'm not touching it because I'm fine if we come back and make a wave 3 correction, or sorry, 3 wave correction down here, or even in this zone, right? I'm fine. And so that's how I would play or read these markets. And this is actually not out of the ordinary, because remember I said this is your inverse head and shoulders, and you broke it and you retested it. Well, this is another retest right here. If you break out and you come back, retesting this inverse head and shoulders with this 3 wave move. Do you see how this works in so many ways? So the Elliott waves work, okay? And then the pattern analysis works. The inverse head and shoulders, breakout, 3 wave retest down to the neckline of this inverse head and shoulders, which would be your 0.618. Okay, right here. Around 16,660, you know? And that 3 wave move is likely to take just as long as this 5 wave move took. So let's say, just for the sake of argument, that this took, that we hit wave 5, the top of wave 5, later tonight, right? In a few hours after the DXY opens. Then it took all of about 2 days to make that 5-wave progression. Then that 3-wave progression would take, similarly, about 2 days. Do you see that? Likely. Again, it doesn't have to be equal. Wave 1 and 2 don't have to be equal, but that's a likely scenario for Bitcoin in the coming 48 to 96 hours, okay? And that would take us, guys, you can't make this stuff up. If that happened, then you come back and you complete that 3 waves. Okay, let's look at the time. Look at when that would be. January 4th. Do you know what January 4th is? Who knows what January 4th is? Write it in the chat. If there's anybody in the chat who knows what January 4th is, it's significant from a trading standpoint. It's significant. What's January 4th? Well, let me tell you. January 4th is the next full moon, I believe. Let's just check. I think. January 6th. Well, okay. That is still actually okay. If the next full moon is officially on January 6th, we know that full moons typically spell the bottom of a particular market or a bottom of a local market. Okay, and 0 to 3 days within that full moon, you should expect a market bottoming. Okay, so if January 4th to 6th, we got a market bottom, that all coincides really well, for this move. Okay, so this is my likely read on Bitcoin for the coming 96 to 100 and some odd hours, right? I.e. 4 to 5 days. We continue this progression. We find resistance here around 16.9. We retest this massive inverse head and shoulders around January 4th, January 6th, and we continue. That's what I'm reading for Bitcoin. Okay? And that's why I'm reading it. Okay? So we'll see what happens. But again, if I'm bullish, which I am, and I believe that this is the beginning of a bull run, I don't care what the retracement is, a regular, wave 2 retracement. I'm not touching my positions. Obviously, I'm making sure my downside is protected, my liquidations, my stops are protected, and I'm not in the line of fire, right? But I'm just letting everything play out, because what you're going to see, and let's now segue to some altcoins, is like Ethereum. Some things are going to pump a lot more, a lot faster, a lot higher than you expected. That is the definition of a bull run. So, for example, look at this sort of market, this pattern in Ethereum. You see that you had this consolidation, right? And this breakout, retest, expect a further breakout, okay? So what do you see here? Just like in Bitcoin, this is likely an impulse. 1, 2, 3, 4, 5. Actually, you might see 5 waves here. Sorry. You might have seen 5 waves here. Let's see. Let's look. Let's see. 1, 2. See, it's tricky to count because you can get so many wave extensions in a bull market. This is why when people say, "Oh, why are you trading these sideways markets? Just wait until the bull market and trade that." That's silly. That's bad. That's not smart. You're leaving so much money on the table. When the bull market comes, it is opportunity like you've never seen before. But to take advantage of that opportunity, you have to be clever and patient. Even though the price is moving in the direction, in a very impulsive direction, right? Upside direction. And you can also say the same thing for a bear market, a drawdown, right? The price is impulsively moving to the downside. To take advantage of those, you grab a position and you let it ride. Do not try to nickel and dime or over trade the move, because the moves, just like I'll say this, just like sideways markets are unpredictable because corrective price action and patterns come in all different shapes, sizes, and colors. Once you get into a bull market, right, supply is low, demand is high, and you're really, really volatile in one direction, right? You're going up. There's so many different ways to extend waves. So trying to read, oh, this is the end of this progression, or this is a wave for, this is definitely a wave for. Don't do that to yourself. Get in and ride the wave. Go on the higher time frames. Read a potential exhaustion on the higher time frames and trade that. Don't try to trade the 5-minute chart. A lot of traders fall prey to that. We're in a sideways market, so they're used to trading sideways, and that's all they know, and they maybe were successful in that sideways market. Once the trend changes, they keep this strategy. You have to change strategies. If you maintain the same strategy and you're trying to, trade the impulse on the 5-minute chart, you're just going to leave money on the table. I'm speaking from experience. Okay. So yeah, Ethereum's looking great. It looks impulsive. Does this not look impulsive to you? That's my question, right? You went up, you corrected, and now you're looking to continue. That looks impulsive to me. That does not look corrective, okay? And that impulse, to me, started right here on January 1st, the evening of January 1st. 2023 is different in crypto. And that's what the charts are saying, okay? Litecoin, look at that. Look at that strong move. You don't get strong moves like this. Strong moves like that are indicative of an impulsive move, okay? Another thing that I see on this chart, and this is a 15-minute time frame, okay? Not to say that you have to trade the 15-minute time frame, or you should trade the 15-minute time frame. It's just, I'm just showing you patterns, okay? I'm just making a case for why this is likely impulsive price action and not more corrective sideways price action, okay? But again, my advice, if you care, is grab a position, get in and leave it alone. Don't mess with it. This is quintessential triangle. Wave 4. You don't see triangles in wave 2, only see triangles in wave 4. This is A, B, C, D, E. Okay, this looks like a triangle to me. This is what you would call a pennant. A flagpole pennant. That's a bull flag. Continuation is what you should expect, okay? And that's Litecoin. Very bullish. And by the way, I don't know how many of you guys know, but technically or fundamentally speaking, Litecoin is super bullish because it is right around the corner, apparently, from entering another halving. You know how people talk about the Bitcoin halving and the supply halves, right? So you get how do you say? You get the block halves, right? Because this is proof of work, right? So the people who get rewards for mining the currency get half as much as they used to get. That increases the supply, or that increases the demand, reduces the supply of the currency. So that is meant or supposed to increase the price. Okay, so that is what Litecoin is looking at in just a few months, I believe. Okay, so but it's been a great performer, and I've said that this was likely going to be a great performer, not because of the halving, because I didn't know about that, but just because of the technicals. On the high time frame, it just looks like it's been sideways in accumulation, okay, in this leading diagonal, and it's finally breaking out. So I actually been saying for months, Litecoin's my largest position, because in terms of risk to reward, it's not risky because it's a high market cap. It's an old established project, proof of work, one of the few remaining proof of work projects, and the chart looks great. So the returns are going to be, they're going to be exceptionally good, just judging by the chart. Okay, but this looks very much like the beginnings of an impulse right here. Right here. Again, you can see some sort of wave 1, wave 2, wave 3, wave 4, right? Again, it's hard to read impulses that are in a bull market because there's so many different ways to extend waves and, all that stuff. So just get in and ride. Get in at some sort of support and ride. That's my best advice. Okay? Algorand looking great. This is very impulsive. Guys, look at this. Actually, this started on New Year's Eve. No. The 30th. So you see, ever since the 30th, you've had that impulsive price action to the upside, right? 2023 is likely to bring much more of this. And when will it stop? When is the fifth wave? You don't know. So don't try to guess. Okay? Obviously, I told you that Bitcoin is likely to do X, Y, and Z, but I'm not trading that. Very important point. I'm speculating on what it's likely to do based off my analysis, but I'm not surprised in the least if it outperforms that by so much more, right? That is very, very important. Very important point. But yeah, look at Algorand. Since December 30th, whether people know it or not, that's 14%. Okay? Just quietly chugging along, making higher highs impulsively. Not like, sideways, a little bit sideways. No. This is very clear, defined. The slope is very impulsive. Yeah, it's almost erect. It's almost a vertical. Yeah. So that's good, and it looks like it's about to break out once more. All right, look at Dodo. Dodo looks like it's just about to start. Okay. Looks like this is the beginning of your impulse right here on the 1st. And this is your first intrawave correction that took a little bit of time. It looks like your wave 4. Like, looks a little complex. I'd imagine that you get a big move like this to at least this area, okay? But again, don't be surprised if it outperforms that projection. Look at that. Look at Dogecoin. Again, you spy an inverse head and shoulders, which is a bullish pattern. That move confirmed it right here, right? Because this move is confirmed upon breaking of the neckline to the upside and retesting it, which is what you see here. And that should yield a breakout, okay? So just the pattern analysis on this looks great. Again, it looks likely that I would say your impulse starts here. Okay, and this is just a continuation. But again, this looks very bullish. These assets look extremely bullish. You do not want to be on the wrong side of this trade. Because if you're trying to scalp short, it's likely you will get burned. I don't expect too much retracement from these assets, right? The market, when it changes from sideways to impulsive up or down, a lot of people, they get caught off guard. And they still, maybe they had a little bit of success trading ranges in the sideways, and that obviously won't work in the new market, okay? This is a new market. If we're reading this properly, this is a new trend. This is an impulsive trend. this will go up more than it goes sideways, and a lot faster than it goes sideways. Okay, that's why we call it a bull market. So prepare for that. Best way to prepare is to have your positions accumulated and then leave them alone. You have to exercise discipline in not touching your assets, your positions in a bull market. Don't try to overtrade that. It's the worst mistake you can possibly make. The bull market will do its job. It'll get you your returns. You do not have to try to overtrade. Usually that just gets you get in your own way. Okay? You make things harder and you're less efficient. Very, very unlikely that you can outtrade the bull market. Do you see? It's just too volatile. It's too quick. It's too unpredictable. Less is more. Kind of same thing in a sideways market, right? Less is more. Just accumulate. It'll go up and down, but just accumulate. That's what we've been doing on this channel, yeah? Look at this, RSR. I think that this bull market started over here. You have a clear move here and a continuation of that, okay? Very likely. I don't know, but very likely. Okay? Synthetics, same thing. Once more, you see a sort of inverse head and shoulders, and it has been confirmed with this right here. Okay? So it's very promising, very promising. You know, this may be a wave 1, wave 2 situation and a continuation with wave 3. Okay, would not be surprised if that were the case. This looks bullish, this looks impulsive. Okay? Dent. Look at this. Guys, look at this. This is very clear. This is corrective in nature. You know it's corrective in nature because this went up and this retraced beyond the 0618. Okay, the other thing you know is that this is a triangle, quite clearly. It is a triangle accumulation. And looks like a B wave to me, okay? So you have your A wave up and your B wave, and this is the last bit of your B wave. And now that breakout is going to be massive, okay? Why is it going to be massive? Because you have all this accumulation here. All this accumulation here is going to lead to a massive move. Do not be surprised if Dent yields a massive move upon breaking this right here, this resistance, okay? Very nice move, very nice trade right there. Not financial advice, but I definitely got in on this. I know one of you is very big on Dent, always asks for Dent. I looked at the chart. I liked it. I got in because I was like, ooh, that is a nice accumulation pattern. And it's a good opportunity to build a position in this triangle. Triangles, some people only trade triangles. Some Elliottician only trade triangles because, I mean, it's relatively safe to accumulate your position in this area. And if it breaks down, there's a tight stop that you can make, right? Obviously, you're never always right. Sometimes these triangles break down and show themselves to be triangles in a larger B wave. Okay, we've seen that quite a few times. Meaning, let me just kind of elaborate on that. So this itself is a triangle, yeah? But it's a triangle within a larger move. So that is like it's a counter-corrective move, a B wave, right? But with an intermediate triangle. Intermediate triangle. Does that make sense? So it's not a triangle that's destined to break out per se, but it breaks down and that just completes that move. Okay, we've seen that a ton of times, but assuming that that's the case, you can always set your stops right here. Okay, protecting against that breakdown. Just a few techniques. What else? What else? What else? Okay, look at Shiba Inu. Very nice. This to me is a clear count right here. This is an A wave, a B wave, second degree AB base right here. Sorry. And a pivot. And the impulse starts here. Right here. On the first. Okay. So, again, you're looking at some sort of bullish construction. A W, perhaps, here in this case. And you're looking to break that to the upside. Okay. That's just the small time frame analysis. And Cardano, last but not least, look at this. Once again, you have this W pattern that's broken up to the upside, retested. Looks like it's going to continue its way up. Would not be surprised if, just like Bitcoin, you got this to come up here and then this to retest this neckline right here. Won't be surprised, because I don't see a proper retest of this level right here. Okay, so I would not be surprised if you got to these areas and you put in a 3-wave move to this impulse down to this level. Okay. Yeah, that's pretty much it. I think Ada was the last one. Yep. That's pretty much it, guys. Look, we're getting a move out of this area. Very likely going to have continuation here to the upside. Okay. Is this the best time to enter? I don't know. Again, I would not be surprised if you came back down here. And that would be the ideal entry point. But again, who cares? If you're on spot, get in whenever. Who cares? If you're on leverage, you're on margin, now's a good time. It's not bad. But if you're super patient, perhaps wait for this 5-wave sequence to complete and the 3-wave subsequent retracement to happen. And that is the ideal entry point. That would be a high time frame wave 2 correction. And most Elliotticians love getting in for that wave 3. Osman says, "Hi Dean, thanks for the stream. I decreased the number of coins I'm holding to 6 as KSM and HBAR dipped, and I sold my FTM and bought more of those as FTM didn't dip. I got the bottom of those. I would appreciate your thoughts on QNT, Dean. I cannot see what it is doing. It looks bullish to me, but it'd be nice to hear what you see." Obviously, yeah. Let's look at QNT. And Osman, yeah, I'm a huge proponent of managing your positions in such a way that you're not over leveraged. Okay, for instance, full disclosure, you all know that I was into XRP and I got out of XRP yesterday. I got shaken out of XRP. XRP had a 14% move to the downside yesterday. Okay, it wasn't terrible, but it shook me out. Okay, technically, there's nothing bad. Okay, it's not like it broke anything. Okay, but it did go further down than I thought it would, because I was using this as an A wave. I calculated this as an A wave and this subsequent move to be no more than 1618 of this, but I misread it, because actually the A wave I should have been worried about is this. And this, all of this is counter to that. Okay? So I didn't read that properly, but if you want to get into XRP, if you're interested in XRP, I do believe that this is a great entry, as this is clearly an impulsive move and a correction, and I imagine this will keep going. But I just wanted something that I could get in with less variation. I'm going to talk about QNT in a second, but one of my techniques is I get into positions if, I know given my analysis, there's not too much variation, right? I didn't know after that move yesterday that we wouldn't come down and do some AB basing here, right? Because if this was corrective, that would have been likely. So it's really hard to trade that and hard to get in there, right, on margin. So I just left it alone, and I got into a really high leveraged Bitcoin trade because it was really easy to read. Much easier to read, rather. Much easier to read. Okay, so that's just a quick example of, it's not bad. Nothing XRP did was bad. It's just, it took me, kind of like what Usman said, it did something and it went down more than I thought it would. And it shook me out, quite honestly. And so I just took the opportunity to get into another asset. And that's fine. But at the end of the day, I like to keep my asset list relatively tight. I don't want to be exposed to a million different assets because even if you're not a professional, you have to monitor these assets. This is crypto. This is a very risky space. It doesn't matter even if you're dealing with things that you think are established assets, established tokens. You have to monitor your positions regularly. It's not like a set it and forget it. So as a result, you don't want to over leverage or overextend yourselves by getting exposed to everything under the sun. You have to be discerning. Okay? It's better. It will lead to higher levels of success, right? And there's no reason with 20,000 plus assets, there's no reason to expose yourself to things that are shaky, fundamentally shaky, right? All right, let's look at, why did I do that? Let's look at Q&T for us, man. Let's use this one. Okay, first things first, let's go on the high time frame. Just gain some perspective. And it looks like we've used this before. Okay, so we've looked at this before. And we saw this as being impulsive. And this isn't wrong. This wasn't wrong. And why wasn't it wrong? Look at this. We saw before this as being an inverse head and shoulders, okay? With this as being the neckline. That seemed to be correct, relatively speaking. And also, this I counted as 5 waves, right? That was a good count. Why? Because that was the last of this progression. So it looks like Q&T has been impulsive since June, which is something that you don't see in many assets. But this looks like it's been impulsive since June. Highly likely that this is wave 1. Whoops. Wave 1, 2, 3, 4, 5. Okay? Now, is this pure impulse or is this a corrective zigzag? That would be my second question. Okay? Kind of doesn't matter, but kind of does. Okay? It doesn't matter in the sense that if you're trying to trade it, if it's 5 waves up, you just, try to find 3 waves down and you buy support. Okay? But if it's corrective and it's a zigzag, then you know that wave 2 is going to take a little longer than, or it's likely to take a little longer than usual. So let's measure from the beginning to the end. So that's 121 days up. Okay, that doesn't seem to me to be pure impulse. Okay, it could be, but it's like, what'd it do? 387% in 121 days? That's not very bull market-ish, but it could be. It could be its own bull market. It could be. We don't know. Let's just, I'm a big fan of saying I don't know. If you don't know, you don't know. There's no reason to assert one way or another. the analysis can continue and give you other clues, and then you can make up your mind once you get more information. Okay, so looking at this, I'll say this. This is not over. It's unlikely that this correction, if this is a 5-wave sequence, this is just the beginning. This is likely to do something like this. Does that make sense? Whether this is pure impulse or it's a zigzag. This is the power of Elliott wave theory. Okay? This Q&T is unusual in the sense that in June, it was already making 5 waves up. Very few things were in impulse, even in corrective impulse in June, okay? Most things were going sideways. So don't think, oh, but Bitcoin's going to be going up, so everything else should go up. Yes, more likely than not, most things should be going up. But there are always exceptions, okay? That's why you have to monitor all your positions and read every chart. Not assume that everything's exactly the same. This is likely what's happened here. You put in a wave 1, wave 2, wave 3. This complex wave 4, you see right here, this double 3, WXY, likely your wave 4 correction, and then your wave 5, okay? Everything fits right here. Just looking at how this impulse is structured, the structure of it, the slant of it, the way it moved, it looks corrective to me. It does not look bull market impulsive. It looks like a corrective impulse, okay? That's one thing I'll say. Secondly, okay, it looks like that. I don't know. I still don't know. I'm still going to stay in the camp of, I don't know if this is pure impulse or corrective impulse. The second thing is, so this correction now is what we want to focus on. Okay, this is very likely your 5 waves, and that was very likely the end of your 5 waves. And this is very likely the beginning of your correction. But what I'm seeing here, this is my first kind of my first take. Typically the first thing that comes to you is correct, and I'm not, you shouldn't really second guess that, right? I'm trying to stay as simple as possible. I'm seeing this very likely. This is a 3-wave move. This is a consolidation reversal for a B wave. This very much looks like that. All of this was 2 degrees of AB basing on a small time frame to give you this B wave, or what people call a bear market rally, or a counter to this right here, okay? And I believe what is likely to happen is that you're consolidate reverse up here and put in that move down here. And all of that, once it's finished, then you can start your bull market in earnest. But I'm seeing this happen in Q&T. I could be wrong, but I would be surprised if it just went off, and I'll tell you why. And this is the power of Elliott wave analysis. The time it took, we saw it was 121 days to go up in 5 waves here, right? It has taken only a fraction of that time to correct. Only 74 days. It just seems insufficient. Technically, it's possible that that is it. Why? Because you've come down to a minimum of the 382 Fibonacci retracement level. We all know that the 382 Fibonacci retracement level is the minimum retracement for any wave 2 correction. If this were wave 1, that were wave 2, okay, you're fine. but it just doesn't fit. It doesn't look right, and it doesn't smell right. It doesn't seem to be the case. I believe it's very likely that you should take at least 121 days to complete that. So I would give, after you put your move up, right? Thus far, you put in 70 some odd days, right? What was it? 76 days? I believe QNT is just on another cycle. I don't know why. But most altcoins that we've been looking at on this channel, that we've been working with, studying, are obviously not. But I wouldn't be surprised if QNT started its bull run mid-February. Wouldn't be surprised. Okay? Can it start it here? Sure. Was this... Can this be a part of a ending diagonal, right? Remember, it's really hard to read with 100% accuracy because there's so many different things that can happen. A wave 5 can end and go like that. That can happen. That's a likely wave 5. Or that is a possible wave 5. So we don't know. Okay? Here's what I am very highly likely. Here's what's very highly likely. High probability. Whatever this is, the next move is up. Okay? Now, well, let me tell you this. If your next move does not... This is how I would trade it if I were in QNT. This is exactly how I would trade it. If my next move does not break $394, okay, on this chart, which is represented by the 1618, why? Because if this is an A wave, for this no longer to be a B wave, you have to break that 1618, $394. If for some reason we come up in this region and then start going sideways, my spidey sense is tingling. I think that the scenario that leads to this being a massive 3-wave move is likely, and I'm probably getting out at this point. I'm taking my capital out here, and then I'm waiting for all this. If I'm really, really high on QNT, I'm waiting for that move to happen, and I'm getting in, and I'm trading it for February, mid-February, likely around that time. Okay, so that's my read on QNT. It is, and again, if you just read the pattern analysis, this is an inverse head and shoulder. You broke, you retested, but I believe you're going to retest again, like that, before you continue. Just, it looks like that is a likely move. Okay, let's just put that in case we have to come back to this in a few months. But I believe that that is what is on the table here. Something like that. Okay? I hope that helps. I am in spot, but seeing KSM and HBAR dip to a nice price, I just didn't want to miss the opportunity to buy them cheaper. Yeah, it's all about opportunity cost, Osman, especially in a bull run. We do not get these opportunities every day. We've been, on this channel, we've been working for the past, 600 or so days, reading the markets, accumulating positions, right? We do all that work for 90 days worth of activity. And in those 90 days of activity, those 600 days of work, of analysis, of accumulation, of taking some losses, right? That all is more than made up for, yeah? That's just how it works. It's like hunting. It's like anything. You put in the work, a disproportionate amount of work for a small period of time. Like Usain Bolt trains, decades to run just a few seconds of worth of time. And in that few seconds, right, those few seconds are equal, or they're the result of decades or years worth of work, right? It's kind of the same thing in trading. So you do want to take that into account, and you don't want to waste the opportunity for this bull market, which is likely to be a historically great, right? You don't want your money sitting on the sides, not taking advantage of those moves, because if QNT does what we think it will, you'll always have an opportunity to get back in when it does start moving. The other thing, Panapoet says, I think 30 billion is leaving the market in a few days. Very low volume. They had to pick up that liquidity just to hold up XRP and Quant. Bitcoin fake out, shakeout. They're using exchange liquidity. That's not being traded just to hold up the market. They can't force the markets up with funny money when they're being audited, so there's a big drop coming. So Panapoet, thanks for sharing your views. I believe it's all about the dollar. It's that simple. I mean, there's a lot that we talk about in terms of what moves the market. I think the main thing that moves the market is the dollar. So looking at if the dollar's strong or the dollar's weak will really give you an idea of how Bitcoin moves. The underlying asset to Bitcoin is the dollar. 60% of all goods and services traded in the world use the dollar, right? So if the dollar is by definition rising in value, then those risk-on assets, whatever is the dollar is used to purchase, falls in value, right? It's simple math. And so when the dollar's falling like it is right now, okay, on a small time frame and a high time frame, and if we do break this support right here that we're in the course of breaking, right, and this is a small time frame, right, but on the high time frame, it's obviously represented by a much more significant move down. If this move plays out, then that's your Bitcoin bull run right here. Okay, the breakdown of this head and shoulders. Nothing else matters. Okay, you can look at, some people think it's the S&P, some people think it's railroads, some people think it's bond markets and yields and, sentiment, all that stuff. I think it all really boils down to the dollar, and we could prove that with just one chart that I show frequently on this channel. It's a 12-year chart with Bitcoin versus the USDX, the dollar currency index. And for 12 years, you can see on a monthly time frame that Bitcoin and the DXY are mirror images of one another. They're inversely correlated. If the dollar goes up, Bitcoin goes down. If Bitcoin goes down, the dollar goes up. So we're going to see, so we've seen the dollar go up for 12 years pretty much. And it's finally starting to break down. That breakdown started right here in September. You've yet to see Bitcoin react to this, right? This is also why we're saying we're historically oversold. For 3 months, we've been going down in the US dollar currency index. But for 3 months, we've been pretty much stable in Bitcoin, right? Sideways. Expect that to finally play out, especially with this move down, which is very likely to happen. And that's when you see your bull run. So I do expect a big move in 2023 and more sooner than later. And yeah, I don't really believe it's a market maker per se, like, the composite man, Wyckoff's composite man. It's just how the markets work, right? The dollar goes up, Bitcoin goes down. The dollar goes down, Bitcoin goes up. So do stocks in general, right? In general, things just move with the dollar. And it's not some random person pumping hundreds of billions of dollars into Bitcoin's market or into some other assets market, right? Remember, you have Bitcoin, which is a multi-billion-dollar market. In order to move it, Michael Saylor and his millions aren't going to do anything substantively, right? You need hundreds of billions of dollars to move the market. Or sorry, you need many billions of dollars to move hundreds of billions of dollars worth of a market, right? That market cap is 400, something like almost $400 billion, yeah? So To move a $400 billion market by 1%, you need $4 billion. Few people are buying and selling $4 billion, $4 billion worth of Bitcoin at any point in time. That's not what moves the market. What moves the market is the denominator, right? The dollar gaining or losing strength. That can explain how hundreds of billions of dollars or billions of dollars at any given time enter or leave the market, okay? And this is probably why in the past few days you've not seen any activity really in Bitcoin, because the DXY has been on holiday, given that these exchanges that comprise the DXY have been stagnant. So that's my take on it. Could be wrong, but I've given a lot of thought to this, and these a lot of these charts and my observations over time have been consistent in this way. So those are just my views. Obviously, like I said, could be wrong. So yeah, that's pretty much it, guys. I'm waiting for the DXY to open at 8 Eastern Standard Time. That's in about 2 hours from now. Or sorry, an hour and some change. It's already 6:43 p.m. So about an hour and a half. I would not be surprised if whatever move we got in the DXY, which is likely a move down, translated into a pop in Bitcoin and these other assets, okay? As I always say, in a bull market, you can expect altcoins to front run the market, okay? Because if it's an actual bull market, these more volatile assets like Ethereum, like Dodo, like whatever, these altcoins are going to move more and faster than Bitcoin. That's just how it works. And so if you look at your Bitcoin dominance chart, indeed, you see a likely breakdown, okay? Very likely that this is a resistance level that we're at, okay? And that we continue to the downside here. And that really shows, or that would result eventually in a massive drop in Bitcoin dominance, right? And that, again, kind of like what you see in the DXY, has been coming for quite some time. As you can see, ever since 2018, you've been forming this head and shoulders, and ever since 2021, you've been playing in this region on the neckline. Expect that to finally break down. That's exactly what our momentum indicator says, looking at our stochastic RSI, that we're completely overbought with the market cap Bitcoin dominance, and so it's likely to move down. That is, again, an indication that you're likely to have a bull run. Okay, the breakdown of market cap dominance, of Bitcoin's market cap dominance, which essentially means that everything outside of Bitcoin is gaining strength on top of Bitcoin or against Bitcoin, right? That means Ethereum's gaining strength against Bitcoin. Cardano's gaining strength against Bitcoin, and so on and so forth. So you can see Litecoin's up almost 6%, Bitcoin's up 0.5%, Ethereum's up 1.2%, 1.3%, Bitcoin's up 0.5%. Look at this small sample size of Bitcoin versus altcoins. Obviously, this is my samples, or these are my active trades. This is my list of things that I'm actively watching and trading. But even with this small list, you can see Bitcoin's the shortest, or the smallest mover. What would you say? The smallest mover. That is indicative of a bull run when Bitcoin is one of the most quiet, right? It's gonna move up, but not as much as altcoins, right? Litecoin's moving particularly much more, right? And RSR, so on and so forth. Even going into our general watch list, we can see the same trend, okay? The big movers, Solana, I wouldn't touch it with the 10-foot pole, but to reach his own, is up 13%. Okay, Rauta, Zcash up 6.5%, PYR 6%. Do you see what I mean? So expect that trend. If we're indeed in a bull market, expect that trend to continue. Okay, so guys, that's it for me. I would just look out for that DXY open at 8. I believe it's opening at 8, right? Because it was closed today, and the open of if it's going to be trading tomorrow, the 3rd, right? It's going to open the night before, so it should open at 8 p.m. Okay. That's pretty much it for me, guys. Enjoy. Hope you're well positioned to take advantage of these big moves that are likely coming in crypto for 2023, and it looks like it's already started. Take care, be safe, and I hope you're having a great year. Have a great year. It's not about the calendar changing. It's not about anything but what you make of it. It's your life. You define it, right? Some cultures are not on the Gregorian calendar, and so it's not a new year for them. But if you decide that this is a new year, things are different, meaning things that you didn't necessarily like in 2022, you're going to actively change for the better in 2023, then that will be what you experience, right? If you live like that and if you act like that, then you'll experience that. So I hope you all have a great 2023 and make it a great 2023, actively making it such, right? It's not going to do it for you because it doesn't. Who the hell cares, that we moved around the sun one more time, right? It's just relevant because it's relevant to you if it is, you know what I mean? Hope that makes sense. All right, anyway, take care. Bye.